happy, man.
In his late 80s, my father-in-law went to the DML to renew his driver's license. You know, it was old and what, expired. So at one point during the road test, he approached a four-way stop. A four-way stop. Looked to his left and cruised right through the stop sign. Man, this guy was crazy, man. He just cruised right through the stop sign. Then this frightened inspector was like, "Damn, man, what got into you? Sir, why didn't you look to your right?" Then my father-in-law calmly shook his head. He was like, "Man, that was mom's side." You feel me? Yeah. If that was funny, make sure you comment down below. Tell me what you like about it. Please help me come up with the title to that little story of mine. You feel me? Let's go to what brought us today. The Fibonacci retracement tool has no magic. It helps you see what equilibrium is in price and where to enter at discount. So we want high odd trades and high probability trades. So in this video today, I'm going to take you through 3 step-by-step processes or outlines. In fact, if you think you can do this in the next 3 to 5 days, I promise you, if you implement every single thing correctly that I'm going to show you in this video here, it's going to be the reason as why you're consistent. It's going to be the reason as why you're achieving your goals. It's going to be the reason as why you go the next level. You're buying Bugattis and everything that you ever wanted. It's going to be the reason why you're providing for your family. So, but again, I have to warn you, if you skip any part of this video, if you skip any part of what I'm going to be sharing with you guys, there are only 3 concepts. Make sure you implement everything. That being said, if you want to be consistent in the markets, make sure you're subscribed into Top Forex G. We are only G's here. Yeah, we have a duty to honor our ancestors through achievements. In addition to that, I quoted a free Telegram channel in the description. Just go check in the description as you're watching this video here. And make sure to follow me on Instagram for crucial updates, 100% free. So let's go right into the video. The first thing to understanding institutional order flow is movement. What do I mean by movement? To be a buyer, there has to be bigger pockets to move price around. The bigger pockets are the banks, the pro firms, the whatever. It's not a supply and demand factor. It is a greed factor. This is what most people don't understand. This is what most people miss out. It is a greed factor. It's not supply and demand. It's not your indicators, best ideas. These pro firms and banks want to make money. They are in the making money business. So what they should do, as to our first point of understanding institutional order flow, that's the first point. You want to focus on price and price alone. Price alone will give you everything you ever needed. Entries, exits, where to put your stop losses, where to take profits above the old highs. Today we're looking at discount. So you don't need patterns, you don't need indicators, best ideas. You only need the price. You feel me? So we're going to get into a few examples right here with our second point. So our second point being, going to our second point, many traders, many ICT traders, many retail traders overlook this concept, and it's the reason as to why you're stuck. It's the reason as to why your trading isn't taking off. Yeah, but before you go into the second concept, make sure you've understood the first one as short as it was. Make sure you understood the first one. So make sure you rewatch that part again. This is going to be the changing point of your trading. So the second point is we use the Fibonacci tool, the Fibonacci retracement tool, to illustrate equilibrium. Let me get the Fibonacci tool for you guys. So Fibonacci. Yeah. So we have our Fibonacci right here. So our Fibonacci levels are, let me put it right in the middle here where you guys can see. Let me look for here. Fibonacci levels are, and nobody else uses this, even ICT himself. Okay, he has the same very Fibonacci levels, but I have, if you've seen, I have TP1 and TP2, and these are sacred to me and me only. And these have been tested over 100 times. So we have the zero, of course, everyone knows that. Then we have equilibrium. Equilibrium is the 50% level. Equilibrium is fair value. Equilibrium is fair market value. Then if you're below equilibrium in a buy side market, that's a discount market. You're in a discount market. So we have the 61.8 level. So between the 61.8 level and the 50 equilibrium, that's our golden area. That is our golden area. Then from 61.8, we go to 70.5. 70.5, we have OTE. OTE is optimum price entry. So between 70.5 and OTE is what we call our sweet spot. That's our sweet spot. Price does not take long in these levels here. But with that being said,